Welcome to another Coffee with Samso, where we speak with ASX companies and the guys who run the show. And we're at the UWA Club here in Crawley again on a nice sunny day. I've got the man Scott Williamson back from Blackstone Minerals. This is Scotty's first Coffee with Samso for 2022. Look, Scotty, you've got a big news. I mean, it's all about your PFS. How's that going?
Yeah, so we've put it out now. It's all good. We basically have integrated the upstream and the downstream. So we've now got a full pre-feasibility study. The first phase was the downstream only. Now we've integrated the upstream. And yeah, we've come out with some great numbers. What it shows is we've got a robust upstream business, which is the big, large-scale Banfook open pit mine, which is the base load feed. We've got a couple of underground mines, Ban Chang, King Snake, and they give us a bit of high-grade sweetener, but really it's about that big open pit mine. It's a large-scale bulk open pit, 8 million tonnes per annum concentrator, so it's a large concentrator. Low strip ratio, 3:1, so it's all about moving dirt, which is it's become the way we do it in mining at the moment. Probably a little bit different to the way we've done it in Australia. A lot of nickel mining's been underground. There is one big open pit mine in Australia, the Mount Keith nickel mine, and that's probably the closest to what we're trying to achieve. So it's a really exciting opportunity. We've shown what it looks like in the downstream business. We've dropped the cut-off grade, so there's plenty of tonnes coming through. We're doing around 18,000 tonnes per annum of nickel. And so it's a really good security of supply for our downstream business. Then we top that up with other third-party feed providers, groups like Trafigura, and that's what then brings us up towards 40 to 45,000 tonnes per annum of nickel. So it's a big project we're looking at. Big CAPEX, but big funding partners coming.
Your CAPEX, is that just over 800 million or something?
Yeah, 850 or 860, 850 million US. So it's around 350 million or 360 for the upstream, 500 for the downstream. The plan is to bring in downstream partners to cover some of that downstream 500 million, bring them in as shareholders in the downstream business. They'll bring some capital. They'll also bring some technology as well. So it's really about bringing those partners in, showing the market that this will be funded. We're not going to put out a number like that if we don't think we can fund it, and we're going to show how we're going to fund it soon.
I mean, to me, 800 million is a big number, but then relatively to what we're looking at, it's quite small. You mean your numbers, your post-tax and your payback period, 1.8 years and working on spot 1.3, so call it 1.5. That's pretty good for any business. I mean, if you bought a McDonald's, you'd be happy.
Yeah, we're pretty happy with the economics. We're very confident in those margins as well. So there's a very conservative premium that we've put in that base case of 20%. At the moment, that premium's around 30 to 40%. So this is for the NCM precursor product. That's a premium over the nickel metal price. So yeah, we're confident in those numbers. We're excited about what this means for the industry, because what it means is that the junior miners like ourselves now have a different path to market. Instead of all of the previous juniors in this industry have always had to build a mine, sell a concentrate to a major, who then clips a lot of the upside. This way we can bring in partners from another part of the industry, which is the battery industry, bring them in as funding partners, because they don't have the skill sets to do the mining. And so they want to bring the funding, they want access to the feed into their downstream business. So it's a really exciting period in the market where, as juniors, we've got a better way to market than previously, where we would always just have to sell to BHP or Glencore or one of the trading houses.
It's like a co-op operation, right? I mean, it's about bringing in partners who have mutual interests and them paying for bits and pieces and everyone brings something to the table, I guess. I mean, in terms of business, you know, your all-in sustaining costs, say call it $13,000 all-in costs. You're selling at 20, I don't know, it's 42 today, but call it somewhere in between. Even if you sold at 20, that model works, wouldn't it?
Yeah, well, the model's working very well at today's prices, obviously.
Yeah.
But
Or even at 20.
yeah, 20. We use 20,000 in the study, and very strong economics. So I like the idea of the co-op. It's something that we have thrown around actually. That the idea of bringing all of the juniors together and sharing the upside with them. So there's other juniors out there that we can work with to bring their feed into our downstream business, and it's the co-op, and it's us against the majors. And I really like that concept, and that's effectively what we're trying to do. We are talking to all of the other juniors out there. Anyone that's looking to build a concentrator or has already got a concentrator, we're talking to them, and because we want them to come to us and not go to one of the majors.
Because you are right, you know, when you mention that most of the scenarios is you start thinking about Glencore and BHP and from the nickel side of things especially, and now you're actually not. You're going straight direct to the end users. I think it's a fantastic idea. I mean, I'm looking at your thing. I'm no mining engineer. I'm no money man. But if you cut it down to the crunch, as I said, you know, you bought a small business and these are their percentages. Pretty good. You know, most businesses you wouldn't look at paying back at 1.5, even as 2 years. Call it 2 years, and that kind of time period is very short. So from a very sort of uneducated sort of investor looking at this, the PFS, what does it actually mean in the sense of in the scheme of things? Is it rubber stamping something, or is it half a rubber stamp, or just holding the rubber stamp?
Yeah, so I suppose the way to look at it is it's the next stage of de-risking the project from a technical perspective. So we started with the scoping study. We've now completed the Pre-Feasibility Study. We're about to embark on the Definitive Feasibility Study for the upstream. We've already started that for the downstream, so those will come together. So it's really about sort of de-risking the project from a technical perspective. Unfortunately, mining is not just like a factory. You can't just turn it on. There's a lot of work that goes into these studies, from understanding the ore body all the way through to the metallurgy and the mining. There's many different aspects of a study. So it's just that next step closer to being able to build, and it's a really significant step, because the difference between the PFS and the DFS is only a margin of safety. Really, it's very similar study as far as the detail, but you that next stage you just go into that little bit more detail and a little bit more with respect to your contingency. So you're reducing your contingency, you're getting a little bit more accuracy. So yeah, it's really about just moving through these studies and then being able to build it.
I know it's hard for you to say it, and probably I don't know how you're going to try and answer this question, but from the layman looking at this, and I know you're talking about contingency and reducing the margin for error in all aspects of the business. He's going to look at this, oh mate, you've done the scoping study, that was your baseline, and you said, you know, that's how we need to start from somewhere. Now you've done this PFS and you've done some preliminary studies, and most people out there who've had small business will think, well, you know, that's when we make that gut feeling, you know. Can they have that gut feeling saying, look, this is likely to happen, or I wouldn't use guaranteed to happen because nothing's guaranteed, but likely to happen with good upside?
Yeah, so yeah, you're right. Like at a small business level, you'd probably take a PFS and run with it. And
mate, probably before that.
Yeah, maybe the scoping study.
Yeah.
But, it's really about the bankability. So the next stage is taking it to a point where we can go to the banks and they can then have the same confidence we have. So at the moment we're confident that if we weren't going to the banks, we'd probably go with the current study. It's ready to go. But the next stage is getting the broader market up to where we are with it. So we're confident because we're in the wheelhouse and we understand it all. But now the next stage is taking it to that next level of accuracy for the banks and for the broader stock market as well. And unfortunately, that's just another step. But if we were funded and we didn't need to go to the banks, we'd probably start now.
Okay. Well, a lot of people could run with that, and you might get a phone call from ASIC. I mean, the resource is great. The inventory is good. What does 48.7 million tons mean in terms of? I mean, you got down here 10.3 years of sort of life of mine, and that's a sort of based on the model. Mm-hmm. And I understand that normally gets extended because you have to have some sort of space. How does that fit in terms of world scale, like your peers or something like that? Is that like fantastic, okay, medium, on par?
Yeah, so I think it's not quite as big as Mount Keith. Mount Keith's probably 3 or 4 times bigger, but it is a globally significant scale from an open pit nickel mine perspective. They're just, like I said previously, most of the nickel mines for sulfide are underground. So it's it will be one of the biggest nickel sulfide open pit mines in the world. It's the interesting thing is that we're taking the whole intrusion. So the magmatic nickel sulfide ultramafic intrusion, it's a bowl shape, and we're basically mining the whole bowl. And what we determine whether it's waste or ore is based on the cut-off grade. So we're mining everything. Some goes to the waste dump, some goes to the concentrator, and the cut-off grade depends on the nickel price at the time, the recoveries that we're getting at the concentrator level as well. But what we're seeing is that we can actually, there's a lot of ore between 0.25 and 0.3% nickel, and we haven't added that into the study because we want to do a bit more work on the recoveries at those lower levels. We've focused more on the around 0.3 to 0.4%. The head grade's around 0.4, but we see a lot of opportunity to potentially double that number because we're mining it anyway. So the costs are already sunk. And as long as we can recover enough at a particular nickel price, we could double that number. So yeah, that's a pretty exciting thing that we're looking at for the next stage of studies. That there's just as much tons in that 0.25 to 0.3 as the whole rest of the ore body. So we could double the number. Because we're mining it anyway. So instead of sending it to the waste dump, send it to the concentrator and then ultimately through the refinery. So we're pretty excited about that as well. And that was probably missed in the study a little bit.
I guess that's a good problem to have when the time comes for you guys, right? It's
particularly with today's nickel price as well.
Yeah, well, I mean that's going to be a question for you, but I will leave that to the end. And before anyone, sends me messages and saying this is not a real coffee with Samso, it's all fake news because we're having juices. It's because Mrs. Samso says I'm drinking too much coffee. So, anyway, so moving on. Obviously, you got the refinery and you caught TKR and things like that. First production in 2025. So, as soon as you put a date, mate, everyone's got a gun pointing at that date. So. I guess, it's a loaded question, how feasible do you see that happening? I mean, it's still a fair way, but...
Yeah, so the original date was really our very early in the piece, back in the scoping study level, we wanted to achieve a 2024 outcome. We did everything we could to keep that on track. But once we got into a bit more detail, which is what happens through that pre-feasibility study phase, we realised that there was just too much to get done to achieve the 2024 goal. We're fully aware that the gun's to our head now. We have to meet the mid-2025 outcome, and we've got enough, I suppose, flexibility in that to achieve that. A lot of it comes back to what are the risks to achieving that, and so all mining projects have three main risks: funding, technical, and permitting. And I'd say that funding is our lowest risk, and I think funding is where the market's probably missed the point a little bit because we have to approve that. Technically, we're doing everything we can. We're using world leading experts in hydromet. And then permitting. Permitting is difficult everywhere in the world. There's an anti-mining movement. It's more difficult in some Western countries than it is in where we are. So, but permitting is something that we have to be aware of, and we've put some permitting in that timeline as well, so people can keep an eye on how that's going. So, yeah, there's a lot of risks around achieving that mid-2025, but we think that we've got enough contingency in there to deliver.
I think permitting or court jurisdiction risk is always going to be a sensitive thing, and sometimes it's you know you can do it, but there's always that question mark. The question mark is always there, right? Whereas funding and technical, you can almost tick those question marks off as you go. I mean, in the market like now, for you guys, funding's probably like, well, it's a non-event, right? But anyway, you speak of 50% of the feed coming from your Ta Koa, and the other 50% obviously is coming from outside. Is that a concern? Is that it will happen because obviously if things are buoyant, it's going to be there anyway. So what's the thoughts on that?
Yeah, so the way to think of our third-party feed providers is that it's 50% of the feed from a concentrate perspective, but the grade of that concentrate will be a bit higher. So that the actual nickel tons will be more. So the average grade of the third-party feed can be between 12 up to 15, maybe even 7 up to 17%, depending on where we access that from. So we're working very closely with groups like Trafigura, looking at where is the feed going to be coming from in 2025, and we're working through that with them. We're also working on this co-op idea and talking to all the other juniors that might be ready to produce concentrate in 2025. We've made 3 investments into other juniors as well at the moment, so we're talking to them about whether they can get their mines up and running by 2025. So there's plenty of options. We do have to show the market what that looks like over the next 6 to 12 months. But we're confident that so at the moment the nickel sulfide market is smelter or refinery constrained. So there is excess capacity of nickel concentrate, and what our refinery will do is unlock a significant amount of nickel concentrate that at the moment it doesn't have a home, and so we're going to be the first mover to unlock all of the excess nickel concentrate that will be coming online over the next 3 years.
So we're talking about the feed after we're not talking about the mine itself, right? We're talking about the feed into your refineries part of your business.
Yeah.
And 50 is coming from you, and then 50 is coming from somewhere else. Okay.
So areas like Australia and Canada are high on our priority list. We're also looking at accessing concentrates out of Africa, South America, but making sure that they're ticking all of the ESG credentials that we require as well, so ethically sourced, all of that. So we're using a group called Circular, who also Trafigura are using. So we're not just sort of get it from anywhere. We've got to make sure that it's ESG compliant before we bring it into the refinery.
So the refinery is kicking off in 2025. Can I assume that the mining process will start prior to that, obviously?
Yeah, so it's around the same time, and so we're very focused on having those aligned as closely as possible. We're working on the upstream to potentially bring that in a little bit sooner than we've currently sort of got planned. But we can start this refinery on 100% third-party feed if we wanted to. Our preference is to start it on 50-50. So we'll be aiming for 50-50 from day one. But if we had to, if the mine was slightly delayed, we can always start on 100% third-party.
Okay. With the sudden change in the market, no matter wondering how long it will be, how sustainable it is. I'm talking about the pricing as we speak. Will there be a moment? That's assuming it goes positively and it starts moving a lot higher than we had anticipated. Would there be prodding in the background, going, "Hey, well, we've got to do this 2024 instead of 2025"?
Yeah, we'll be aiming to bring it in as quickly as we can. So if we thought we could do 2024, we probably wouldn't have changed the day and lost 20% of our market cap on the day. So there's already plenty of push to get it in earlier from our downstream partners. So what I suppose the other way to look at it is there a way to produce cash flow earlier? We do have an existing concentrator. We previously were not looking at selling concentrate because of the tariff, but that's always an option. If we wanted to generate cash flow, we could always sell concentrate, but it's not something that we're looking at. But there are because we've got an existing concentrator, we've got an existing mine. There are ways that we could generate cash flow sooner. Okay.
I mean, the business, looks robust, and as you say, it's a PFS, so there's a bit for fine-tuning to go. But when I was reading and thinking about your potential future resource and stuff, and you guys have talked about, you've got other satellite deposits around. How consistent are these things looking at this point in time for you guys? Are you getting consistently grades that you think it will be in that 0.3, 0.4, or are they much lower or much higher, or or thereabouts?
Yeah, so the way to think about these ore bodies is though the big disseminated ore bodies are very consistent. They're I think we do 50-metre spacing on the drilling, and that gets us to indicated. So it's very continuous and homogeneous. So consistent. That will just deliver, and that's why it's a really low risk strategy. Once you've got the recoveries humming and you've got the mining going, that pit will just deliver. And then the high grade underground mines are an interesting, because you've got the massive sulfide vein, and then you've got this matrix and semi-massive, and then you've got disseminated in the hanging wall. So we actually take a lot of the disseminated and bulk it out to make it a bit wider, and that drops the grade. But because we've got such good margins in the downstream business, we can drop the grade. But it comes with a lot of copper and cobalt and platinum group metals as well. So that's the reason why we've got a bit lower grade in those undergrounds than people probably were thinking. On a nickel equivalent, it's still around 2.5% nickel equivalent, because you've got all those credits.
Yeah.
But because of the downstream business, because we've got such a big concentrator, it makes sense to broaden those out and take a bit of the lower grade halo that's around those massive sulfides.
Okay. We talked about all the good stuff, all the positive things. What are the challenges that you foresee that you're willing to say?
So,
apart from jurisdiction, which sort of everybody knows.
Yeah, I suppose we've been pretty lucky. If I look at the industry challenges, one of the biggest industry challenges is access to talent. and we've been pretty lucky on that front. Even at a head office level, we've been very fortunate that we've been able to access good talent. At the Vietnam level, we don't have any issues around talent, so we're pretty lucky on that front. The other major industry issue is going to be inflation of things like fuel and inputs. We're lucky that on that front, because when we're looking at a fully electric fleet, so we're using the renewable power. And we're not seeing any wage inflation at the local level either. So we a lot of these macro issues that the industries has, we're not seeing, which is great. If we look at the jurisdiction, it comes back to permitting. But what we want to do to mitigate the permitting risk is to really get our partners involved. So these downstream partners, we bring them in and we show how important this is to the Vietnam people, how important it is to the Son La people, where our mine and refinery will be built. It's a district that needs growth and needs some economic benefits which will come from us, from our project. So we're pretty confident that this will be permitted and on time. But I'd say that's probably our key risk, and we're working very closely on that, and we want to bring our partners in to help us with that risk.
Would that, what you just discussed there, be something that you think, or if one went so haywire, which I can't see any of them being like that, but what could derail, your walk along the yellow brick road?
Yeah, so the way to think of the permitting is it's a process. It takes time. It's been around in Vietnam since the 1960s. So they've got a mining law that was built on, I think Russian times. I think that it's a different sort of method to the way we do it in the Western world, but it's very similar to what we do in JORC. So their equivalent to JORC is slightly different, but it's the same idea. It's about proving up the confidence, making sure that the ore body's there. If anything, they want us to drill it out to a tighter spacing, which is fine. So our undergrounds, we're going to 25 by 25, which is fine. So it's just a process. It takes a little bit longer, but the good thing is there is a process. It's a proven process. The previous owners went through it. They built a mine, operated it, closed it. So there's precedent of successful mining ventures in this country by Australian and Western operators.
How are the mining people reacting? What are they saying to you? What do they like? What do they like? What don't they like? In your conversation lately,
The money people?
the banks, the financiers,
Yeah,
the
so-
brokers.
What we're seeing is that our current investors are really on board with Vietnam, and so we've got the two camps, the ones that are already bought in and love the Vietnam story and love the concept of bringing in the partners and building something in Vietnam, and then we've got the rest of the market that's still sitting on the fence and not sure. So we think that we can bring them onto the right side of the fence through the next few months of I suppose, de-risking from a partnership perspective. The banks, so we've started down the debt path. They're all ready to go. So this will be debt funded. That's assuming that the partners are on board. So first step, bring the partners on board, bring them in for some equity in the downstream business. The debt will flow from there, and then the final equity piece. It's amazing. Once you've de-risked the whole thing, the institutions all of a sudden, it's a great idea. Once it's all completely de-risked. Yeah. So we've been lucky. We've attracted some really good institutional investors, groups like Fidelity on early, where the institutional market is very much wait till it's de-risked and then they'll come in, and they're happy to miss the 3 or 4 times upside at the start, and then just take the one-time upside at the end. So that's what we'll see. It's a cycle that plays out with most developers. It's hard work getting those instos in early, but the ones that do, they're going to make a lot more money.
I guess, for those that are sitting on the fence and they're sitting on the fence because they're not sure it's going to work or not. I mean, I try to tell people that take the oil and gas industry, when it got consummated and we started using it, it stayed around for a long, long time because you got the issue of, I don't want to change, too hard to change, I'm building cars, and I think we're seeing that with the EV market now, with the battery world, people using more batteries and people even going away from your AGM batteries to lithium batteries, even for cars and things like that. And it's here to stay, it's the future, whether you like it or not. Whether oil and gas will go away in our lifetime, I don't think so. In our children's life, I don't think so. But eventually it will get there at some point. So going forward, I mean, we touched on this a bit. I've got this question here. It says, if you had this moment to talk to these shareholders we're talking about the ones maybe sitting on the fence. So how should they be reacting to your PFS and what we've discussed, and also how should they react to our discussion?
Yeah, so the PFS, as we said, is the next stage of de-risking. It's a great study. It's done by leading experts in the fields of all those different parts of that study. So it's the way to look at it is that's what we're going to do. The bankable or definitive study won't change too much from that. So those numbers, obviously, you can change it with today's nickel price, but the concept is solid. So the next stage is just to de-risk it and then build it. So we're getting very close. What I would say is, I assume that the reason why people are sitting on the fence is because they're not sure whether we can fund 850 million. And what my job is to now is prove that I can do that, and I'll do that over the next 6 months. And so we will come to the market and we'll show how we're going to fund $850 million, and the way that'll be done is through a combination of partners coming in for equity into the downstream business, debt, and then further equity in the ASX listed entity, but at hopefully much higher levels for that final piece. So the first step to that is show who the partners are. We've got EcoPro. There will be other partners. So we're really keen to show that over the coming months. And I think hopefully that's when the market starts to wake up.
Mate, I think you just set yourself a very low bar. Raising 150 million, you talk as if like it's a really difficult job, mate. Let's face it. In this market, where you are, your commodity space, I'm not saying it's walk in the park, but I think it's almost fair to say that it's not as hard as you're trying to make it out to be.
Yeah, and to put that in perspective, so groups like LG, for instance, when I went to Seoul the other day, I said to them, I need about 500 million for this downstream business. And they said, well, our budget for this type of thing is around $10 billion. So I think we can handle it. So these are the groups we're talking to.
Yeah.
So, yeah, you're right. In this market, the scramble for this metal, the price goes to all-time highs. Yeah, there's still a bit of work to sort of line all the ducks up and just put it away. And that's what we'll do over the next 6 months.
Yeah, you can't tell feet on Samso, mate. Look, Scott, thank you. I mean, it's a great movement. I mean, I remember we talked about your scoping study. That would have been 2020, I think, where I asked you the question, can you just tell us what the scoping study meant? And now we're past that PFS, the next stage. It's great, and thank you for your time. And before you go, and I know you don't drink coffee anymore, I've worked with Florence Drummond with the Indigenous Women in Mining Australia, and we've come up with this coffee package, which we
great.
give to guests
Thank you.
who dare to come to Coffee with Samso. and that's your parting gift. But again, thank you, and let's talk again.
Thank you very much.